The first quarter has come to an end, and the good news is that the anti-fragile portfolio is still vastly outperforming the major stock market indices. But where does the portfolio sit now? Well, it's the end of the quarter, so it's time to review the top 10 stocks held by this portfolio. My name is Brian Stoffel, and obviously, as this is my own personal portfolio, I own all the stocks we're about to cover. So, number 10 in the anti-fragile portfolio right now, with an anti-fragile score of 11, is Snowflake. It's about 5% of my portfolio. You can see down here, the blue is Snowflake, how it's performed since my first purchase. There have been multiple purchases, and you can see it's underperforming. And the stock is down 20% in the first quarter, mostly because of tepid guidance and a CEO change. I am cautiously optimistic, but we'll have to wait and see on this one. Number 9 is MongoDB, a 5% position. As you can see, it has been a market smasher since I first bought shares back in 2018. The stock was down 12% because MongoDB, much like Snowflake, has tepid guidance moving forward. The real key here is seeing when any potential positive effects of artificial intelligence on these usage-based products like MongoDB and Snowflake come to fruition. Management teams are being cautious. Long-term, I'm bullish. I could be wrong, but I believe that those will show up over time. Coming in at number 8 is Shopify, a 5% position. Has a little bit of a lower anti-fragile score. This has been by far one of the best investments I've ever made. I got in first at about $4.30, $4.50 per share. Overall, the stock is flat for the year, but I'm happy to continue holding this. Coming in at position number 7, you'll notice most of these are at about 5%, is Datadog, and I put that in the same category as Snowflake, and MongoDB is a usage-based software as a service-ish platform. It has been an outperformer since I first bought it, and really we're just waiting to see if usage picks up in the age of AI or if it pulls back. Now, number 6 on the list is Airbnb. It is now a 6% position, and I think that this is actually quite anti-fragile business. Its stock has not performed well since I first bought it. However, I've repeatedly called it out as a great buy, and I did so at the beginning of the year as well. So, not surprisingly, the stock is actually up 21%. I think that this is a cash-producing machine. It might not be a 10-bagger moving forward, but that's fine. I am okay with having it be an anti-fragile stalwart within my portfolio. And the same can be said for number 5, which is Amazon, a now 9% position in my portfolio, an incredibly anti-fragile company. Along with Shopify, one of the greatest investments I've ever made. I've held it since 2010. I also called this stock out as a very reasonably priced stock within my portfolio at the beginning of the year. And not surprisingly, it is up 19% since then. Coming in at number 4 is Axon Enterprise. This is my highest conviction stock in the stock market. And when the company reported their fourth quarter earnings, it was not difficult to see why. Has a very high anti-fragile score. It is 10% of the anti-fragile portfolio. It was up 21% so far in the first quarter, and it has been a market thrasher since I first bought it. Original price of around $22 per share. Coming in at number 3 is Mercado Libre, the highest anti-fragile score of any company I have covered here. It did, however, have a little bit of a tough first quarter. Shares were down 4%. That's nothing really to get too concerned about. There were some one-time tax issues at play, but the real thing I'm going to be keeping my eye on is the take rates for Mercado Pago within the fintech part of the business. That's where I'm going to be watching. Coming in at number 2 in my portfolio, because Mercado Libre is no longer my highest position, is CrowdStrike. Look, when Palo Alto came out with their earnings release for the fourth quarter in February, it kind of set shockwaves throughout cybersecurity because they said they were seeing light demand, and CrowdStrike basically came out and said, well, you might be seeing light demand. We are not. And the company has been a phenomenal investment since I first bought. A very high anti-fragile score. Shares are up 26% during the first quarter. So what is my number 1 position? Well, it's actually the same as it was when the year started, and that is cash, sitting at 16% of my portfolio as of March 31st. Now, what am I going to do with that cash, or where did that cash come from? Well, there were some sales that happened during the quarter. a lot of small cap starter positions that I took at the beginning, I've winnowed that down. And I actually sold two of my core SaaS companies that I've held for a long time in my portfolio, including a 7-bagger. Why? Because I thought optionality was waning and valuation was getting quite high. And I've also made some buys or some significant adds. I've gone quote unquote all in on a small cap healthcare company. And I've also decided to make a purchase in a distressed mid cap company as well. Now, if you'd like to find out what all of those moves are, you can see my portfolio by clicking the link in the show notes below, because I have partnered with Savvy Trader, where you can see the Antifragile portfolio. Now, it's worth stating, well, how's the portfolio done? Well, over 9+ years, since December of 2014, it's done quite well. If we just focus on this first quarter, not great. Because I'm a long-term investor, I'm not going to lose too much sleep over this. 4.5% returns for the Antifragile portfolio. S&P 500 is up 10%, NASDAQ Composite up 9%, but let's just back up and widen the lens a little bit. And when we do, what we see is that the Antifragile portfolio has still been doing very well, returning 17.5% per year over the 9+ years that I've been able to track. And if you want the long view, you can see right there the Antifragile portfolio in the blue, the NASDAQ Composite Index in the yellow, the S&P 500 Index in the red. So if you do want to get an idea for what's going on in the Antifragile portfolio, our partnership with Savvy Trader allows you to do that. One aspect of this that is really beneficial, not talked about much, is the community aspect, where people who are subscribers to this can ask questions. And got this very nice note just a couple days ago saying, Brian, just wanted to thank you. I've learned so much, particularly from this community aspect. And this person points out, I was dubious of the value I would get because you're already so open book about your stock picks on social media. If you'd like to join that community, I encourage you to click the link on the show notes below. And if you use the code Q1 Antifragile, it's all one word, Q1 Antifragile, you'll get 50% off of your subscription for the first year, but that offer expires on April 7th. So that's where the Antifragile portfolio sits right now as of the end of the first quarter. We'll check back in on this one at the end of the next quarter. And until then, Brian